This is the most important real estate video you'll watch because I'll give you the foundational tools and mindset that you'll need to make decisions before buying any residential property. I'll give you a framework on how to analyze an investment property by walking you through an example so that by the end of this video, you can do it too. After making many foolish mistakes early in my investing days, I always do this before buying. So if you're watching this, I'll save you a lot of trouble in the future. So get ready to write some notes because if you're serious about real estate, you need to learn this. What is truly amazing to me is that people will spend hours on end researching a computer, phone, or a pair of shoes, but they will not spend a fraction of that time on one of the most expensive purchases in their lives. Maybe they don't know how to, but now that you've clicked on this video, you don't have that excuse anymore. Now, I'm going to talk primarily from an investor's point of view. However, any homeowner should know this. After all, your home will be probably the biggest investment in your life. Real estate investing starts from understanding your numbers. And for those who hate numbers and trick themselves into thinking that they are bad at math, it's actually not that complicated at all. The great news is you don't have to be a math genius, and I'm sure 99% of you can do this. Lastly, this is not legal, tax, or financial advice. I highly recommend that you speak with a lawyer, accountant, financial advisor, or your own real estate agent for advice on your specific situation. Just before getting into the lesson, I want to give you a few side notes. When I first arrived in Toronto, I used to do all the following calculations by hand, which was really time consuming. So I built an Excel model where I can just input some of the values and it will automatically do all the calculations for me. I continue to use it and update this model till this day. I can't share this model with you, so please don't ask me, but I promise you that I will have an online version of this created for anyone that follows me one day, hopefully soon. However, instead of me just feeding you the answers, I highly recommend that you create your own model from scratch, as the learning that will come from this will be irreplaceable. You'll have a much deeper understanding of all the numbers as you'll know all the nooks and crannies. Who knows, maybe you'll build an even better version of the model than mine. Throughout the video, I'll be using a more simplified model that I just built from scratch for this video. If you follow along and copy this exactly, you'll have a working model that you can modify for your own needs. I'll be zooming in on the formula so you can just pause the video and copy them down. Finally, for all you finance guys out there, I know there is more to add for greater precision, like adding time value of money, taxes, interest, etc. So don't hold my feet to the fire, because I don't want to overcomplicate things. The purpose of this video is to learn how to think about real estate investments and build a strong foundation. We can get more detailed in the future once we get all the basics down packed. Now, are you ready to get educated? Because I'm about to level you up in this real estate game. Okay, now, let's start this exercise by looking at an example of a real-life new construction condo building that is currently for sale in downtown Toronto. In this example, I'll use a small 488 square foot one-bedroom unit that is a typical investor style unit and an entry-level property in Toronto with a current asking price of $797,900. Yeah, you heard me right. To give you some context, this isn't even the most expensive project that's currently selling, and there are some incentives, so bear with me and we'll see what the numbers actually say at the end of this exercise. Before we get into the property analysis, you first need to understand, what are we trying to accomplish here? What is our end goal? At the end of the day, it all boils down to answering two questions. Number one, what is my monthly cash flow? How much cash does this property give you at the end of each month? This is the most critical question to answer, as this is the number one reason why so many people are going to lose their shirts in the current real estate market. The cash flow will kill them, so this is something you must know. Number two, what is my return on investment, or ROI for short? In the end, how much money will I get in return for every dollar I invest in after selling the property, paying for all the expenses, and receiving all future rent? Understanding your ROI is the second most important thing to know, because if you're an investor, you need to know how much money you're actually making at the end of the day. By understanding this, you can measure your real estate investment performance and know whether it's a better or worse investment than any other property or any other opportunities like stocks, bonds, and businesses. The ROI will be your measuring stick so that you can compare everything. Remember these two questions, as this is the whole point of this entire exercise. Burn it into your memory. Once you find the answer to these two questions, you will then decide for yourself if these fit your investment thesis. Every investor's situation is different, so everyone will have to decide for themselves whether or not the numbers make sense to them. Keep this in mind, as we'll come back to this later. Now, in order to answer the two key questions, we need to unlock 5 more questions that will lead us to our answers. Question number 1. Am I buying for investment or living? The mindset you have when you are buying an investment versus buying something to live in is completely different. The more clarity you have on this, the easier it's going to be to make a decision. I've encountered many buyers buying for investment that they're going to live in. However, because they're going to live in the property, their judgment is clouded by their emotions. They start getting picky about the colors, finishes, and amenities, things that trigger human emotion. Let me tell you a secret. Everyone buys on emotion. If you're buying a home to live in, be as emotional as you want. You have full permission to do so because there are many non-financial things that will affect your decision. But as an investor, you want to try and take the emotion out of it. However, this is very challenging to do. Even for myself, after over 2 decades of investing in real estate, I still have to overcome my emotions when I see the newest and shiniest building with all the hype that goes around it. My brain gets interested and it gets my attention, and that's how I ended up buying Forma. The legendary investors take the emotion out of their decisions and base it on the numbers and logic. Listen to what Warren Buffett said during his annual shareholder meeting in 2023. I can't recall any time in the history of Berkshire that we made an emotional decision. You don't want to be a no emotion person in all your life, but you definitely want to be a no emotion person when making an investment or business decision. When you put your investor hat on, you should focus on the numbers because it's all about how much money is this property going to make at the end of the day. Isn't that what an investor does? Make money on their capital invested? The problem we have in our market was this logic completely went out the door, and the most dangerous emotion, FOMO, the fear of missing out, and greed took over and infested the minds of so many innocent people. So now, let's put our investor hat on, as we'll be looking at this from the eyes of a stone cold, non-emotional, numbers-focused investor. A final important thing to note is that there are different tax implications of buying as an investor versus an owner-occupier. I won't go into detail in this video, but just note that the taxes that can be affected are your land transfer tax if you're a first-time buyer, the HST rebate, and when you sell the property. Okay, next question. Question number 2. What is my total acquisition price? Now, let's start getting into the numbers. The answer to this question basically breaks down into 3 parts. The total acquisition price equals the purchase price minus incentives plus acquisition costs. The purchase price is self-explanatory. It's the sticker price of the property. So in our example, it's $797,900. One thing to note on my spreadsheet is that whenever the cell is the color yellow, that means I can input a value into there. I like to do this because when I adjust the inputs, then all the formulas will just do its thing. You'll see what I mean by the end of this video and why I recommend that you build your model this way. If you're not from Toronto, it's important to know that the purchase price is typically the price under the assumption that you are going to owner-occupy the property. Therefore, the HST is built into the price minus the HST rebate portion. In order for you to get the actual or net purchase price, you need to do the following calculation based on this table. Since our purchase price is above $485,500, we are going to add $24,000 and then divide it by 1.13. You will need to calculate this, but I created this handy Excel formula to automatically calculate this. Feel free to copy it, and for you Excel wizards out there, if you have any better formula for any of my calculations moving forward, please leave it in the comments below. I want to learn. So now that we have our net purchase price, which is $727,345.13, this is a price not including any HST. Now let's keep going to the next part, which are the incentives. Incentives will be common these days as the market is a lot slower than before. It is important for you to actually quantify these incentives into a dollar value so you really understand what they mean for you. In addition, the incentives are typically discounted from the purchase price, so this will affect your overall costs at your final closing. In this example, we can see that there are two financial incentives. The first is a 5% interest on your first 5% of the deposit. The second is a 2-year rental guarantee at $7 per square foot. Let's quantify these incentives on our spreadsheet. So the first is the 5% deposit interest. We'll take the 5%, then determine what 5% is of the purchase price of $797,900, which is $39,895. Then we'll take the total interest per year, which is $1,994.75. Now, we need to estimate the time until final closing. This project is estimated to close in 2029. So I would add another 1 year on top of that because most developments in Toronto are delayed. So let's use 6 years. One thing to note is that I'm sure the interest rate is not compounding because if you look at the developer's sheet, you'll see that it shows the same number that we have. So the total deposit incentive is $11,968.50. Now, let's figure out the rental guarantee incentive. The guaranteed rent was $7 per square foot. The size of the property is 488 square feet. The total monthly rent is 7 times 488, which gives us $3,416 per month. The time period of the guarantee is 2 years, so that's 24 months. You multiply 3,416 by 24, and then you get 81,984. So the total value of these two incentives are these two numbers combined, which is $93,952.50. To make things simple, we will assume that the developer will be discounting this value from the final purchase price on the final statement of adjustments. In reality, I would have to read the fine print on the actual agreement on how this would be calculated, but based on past experiences, this will most likely be the case. So we will subtract the total incentive value from the net purchase price to get our actual new net purchase price of $633,392.63. Now, we're ready to go on to the third and final step and look at the acquisition costs. The acquisition costs include all the costs. Let me say it again, all the costs. This is where most people get it all wrong because they don't include certain costs for some reason. They give excuses like, oh, you don't need to include that in the ROI calculation. WTF? Where did you come up with that? I personally include every single penny that I sink into my property as my acquisition cost. This is why I'm not using the term closing cost, because acquisition cost is more accurate as it's everything I have to pay in order to acquire the property. We will break down the acquisition costs into development charges, land transfer tax, HST rebate, and the minor acquisition costs. The largest acquisition costs are your development charges and land transfer tax. HST rebate is also significant, but you do get this back if you're eligible. The development charges are basically all the charges that the developer charges back to you. They include things like city development charges, education levies, park levies, Section 31, utility connection fees, mortgage discharge fees, check deposit fee, tariff and warranty fees, and more. You won't know the exact fees until you get the statement of adjustments closer to your final closing date. However, most developers will offer what's called a cap on most of your significant development charges. I wouldn't worry too much about the exact details of this for this video, but if you really want to dig into the nitty-gritty, talk to your lawyer or your real estate agent that truly understands this stuff and has read through many new development contracts. They will help you understand what has been capped and what hasn't been capped. If there are enough questions about this, maybe I'll make a future video about this, but for now, let's keep it simple. All you really have to know is that there are these development charges and that you should always ask for a cap when you're buying new construction. In this example, the cap that was offered was $15,500 plus utility metering at $3,000, so a total of $18,500. I always add development charge contingencies because there are other items that are typically not capped in the development charges, like your carry-on enrollment fee and legal fees for changes, like in my example of a recent closing that I did here. I won't know exactly what those items are until I actually read through the actual contract, but I usually add an extra $5,000 or so just in case. If I see most of the items are capped, then I'll adjust it down, and if it's a terrible cap, then I'll adjust it up. I always try to overestimate because it's always better to be over than under, especially when you're representing clients. Now, with the extra $5,000, we are at $23,500 for the development charges. There is also HST on this amount, so I calculated that here. Now, most people don't know this, but these development charges actually form a part of your total purchase price. So you're paying land transfer tax on this as well. You can see on my statement of adjustment all these stars. And then this right here, additional items for E-Reg total. If you add up all the star items, it will equal $11,774.60. Now, the total consideration for E-Reg was $1,340,423.27, when my original net purchase price was $1,328,648.67. So you can see that they added the extra closing costs into the price. So in our example, we need to add this $23,500 to the net purchase price after incentives. So we get a total actual net purchase price of $656,892.63. We are ignoring the HST for now because if you recall, this is a net purchase price without the HST. This number is what we use to calculate our next significant acquisition cost, the land transfer tax. There are two different land transfer taxes in Toronto, the municipal and the provincial. The municipal is also known as the Toronto tax because it's only applicable to properties located in the city of Toronto. The land transfer tax is based on this formula. From 0 to 55,000, it's 0.5%, so 55,000 times 0.5% is $275. From 55 to 250,000, it's 1%, so 250,000 minus 55,000 is 195,000, and if you multiply that by 1%, that's $1,950. If your purchase price was $250,000, then you'd add in $1,950 to $275 for a total land transfer tax of $2,225. Depending on your purchase price, it will follow the same formula. There is also an administration fee for Toronto properties, so you'll have to add this as well. There are two different fees depending on if you claim the first-time rebate or not. Starting from January 1st, 2024, the Toronto land transfer tax was increased for higher priced properties over $3 million. Before, it was 2.5% above $2 million, but now they staggered it even more to tax luxury properties. Anywhere else in Ontario, you'll be using the formula below, which is calculated the same way. This was actually the same calculation for the Toronto tax prior to the Jan 1st, 2024 changes. So to make things simple for you, I've created a super long if statement to calculate both of these land transfer taxes automatically. Again, for you Excel wizards out there, if you know a shorter way of creating this formula, please let me know in the comments below. There are two critical questions that we must ask for the land transfer tax. First, is a property in Toronto? If it's yes, there is an additional land transfer tax. If no, then it will remove the municipal land transfer tax from the equation. In our example, it's yes because the property is in Toronto. The second question is, are you a first-time buyer? If you are, you'll be entitled to a first-time home buyer rebate, which I've automatically calculated below, and you'll have to pay a slightly higher municipal land transfer tax admin fee. In this example, let's assume that you're not, so we will mark this as no. So based on our total actual purchase price, the total land transfer tax will be $19,323.77. All right, I hope you're following along until now, as we have almost completed this section. The next thing we need to look at is the HST. I can make a whole separate video on HST, but to make things simple for this video, take a look at this table and try to follow along because I'll just touch on this real quick. So the HST in Ontario is 13%. It's composed of 5% federal and 8% provincial. If eligible, you can get a rebate of up to 36% of the federal rate of 5%, which is equivalent to 1.8%. This is maxed out at $6,300 at a purchase price of $350,000. then goes on a straight line depreciation until zero at a price of $450,000. So anything above $450,000, your federal HST rebate is zero. Now, the provincial rebate acts a little differently. You can get up to 75% of the provincial rate of 8%, which is 6%. The maximum amount of the rebate you can claim for this is $24,000, which is reached at a net purchase price of $400,000. This is why I can say with certainty that anything with a net purchase price over $450,000, your HST rebate is always going to be $24,000. If you don't get it, don't worry about it. I'll make a separate video just on this in the future. I calculated the federal HST, the provincial HST, then added those two numbers together. Just in case, to check my formula, I verified it by multiplying 13% of the total actual net purchase price, so we can make sure that the number is correct. Then I asked the question, are you eligible for the HST rebate? If you're not, you'd put no. For example, where you're buying the property as a second home, you don't get your HST rebate back in those cases. You can see when you put no, it zeroes everything out. However, in this example, we are going to be renting the property out for 1 year, so we will leave it as yes. Here, I calculated the federal HST rebate with this formula, and then the provincial HST with this formula, then added them together. This looks right because the net purchase price is above $450,000, so that means the total HST rebate should be $24,000. Now, to determine the total actual purchase price, including HST, you will need to take the total actual purchase price, add the HST, then subtract the HST rebate. This will give you a price of $718,288.67. For those of you who are paying attention, if you recall, this is actually how the developer's price is determined based on this assumption and formula. We are now at the final step of this section, which is to add in the minor acquisition costs, like lawyer fees, including disbursements. I'll estimate it around $2,000. Title insurance, which is processed through your lawyer, has really gone up, so I'll estimate it around $1,000. Some banks will charge you an appraisal fee. Most banks include this, so I'll leave this at $0. If you do any upgrades, you can add them here as well. Finally, I'll include any bank fees, like the fee for making a bank draft for the initial deposit, so we'll put $7.50 here. So all the minor acquisition costs come up to $3,007.50. If there's anything else that is related to the purchase of your property, you need to add this in as well, but I've covered most of the common ones. Now, you have all the numbers to determine your total acquisition price. To get this, you will take your total actual purchase price, including HST, which is the purchase price less any incentives, plus the development charges and the HST, plus the total land transfer tax after rebate, plus the total minor acquisition costs, which gives us the grand total of $740,619.94. Congratulations! You now know what the real purchase price of the property is. You can now use this model to get the real price of any new construction property by just changing the numbers on your model. Doesn't knowledge feel so good? We have reached a huge milestone here, and this video is taking a lot longer than I thought, so I think this is a good place to stop because I don't want you to have information overload. I will continue with the remaining questions from the section 3, 4, and 5 to ultimately answer our two critical questions: what is our cash flow and ROI, in the next video. This would be a good time to hit the subscribe and bell notification button if you haven't done so already, to be notified when I release the next video of this series. Our mission should be to try to educate the masses to bring everyone's real estate game to the next level, so that in the future we don't get into this mess by using real estate like some high-limit slot machine. If you know anyone that can benefit from watching this, do share it. I especially want to call out my fellow agents. How can the blind lead the blind? We are dealing with people's lives here. That's some serious responsibility if you really think about it. So we must know our stuff. Let's accomplish this goal together. I want you to hold me accountable to step up my real estate game. I'm putting it all out there because this mission is a lot bigger than myself. Until next time, I'll see you in the next video.